Okay, good morning and welcome back, everyone. Happy Monday. I hope everyone is doing well. My name is Tony Zhang. I'm the Chief Strategist here at OptionsPlay. And today we're about to start and just give you a quick overview again of the markets and see how Canadian markets are doing. So let's go ahead and get started. Now, before I do, just quick, if you can please type yes into the chat window. If you can hear me loud and clear, I just want to make sure that everyone here can hear me. Okay, perfect. So before we get started here, just a quick disclaimer, what we're going to discuss here is purely for demonstration purposes. It is not a solicitation or recommendation to buy or sell any specific securities. Now, what I want to do is I want to start off by taking a broader view of the macro markets, US, Canada, also currencies, gold, oil, give you a brief overview of where we currently stand on all of these macro markets. We'll take a little bit of look at some of the economics of Canada and then dive into some of the trade ideas that we have here for today. So let's first start off by talking about XIU, the S&P TSX 60 ETF. Now, when we updated you here last Wednesday, we were just below the 200-day moving average. We were talking about a potential breakout here because it was starting to break above the $24 level. It was just testing the 200-day moving average. And this week we got exactly that. We got the break, or rather last week, that's exactly what we got, was the breakout above that 200-day moving average. Right now, momentum has not quite confirmed that move higher. So this is still what I would consider more cautiously bullish rather than full on bullish, but the fact that we did manage to get above this very significant $24 resistance level. If you look at my weekly chart, that $24 level goes back all the way to the beginning of 2019. It's provided support all the way through 2019. We've managed to crack back above that $24 level. So from a psychological perspective, this is a major level to get above. If we can clear this 25.25 level, which is the hesitation, if you will, that we had during the February sell-off, that brings us back potentially in contention all the way back up to that $27 level here on the S&P TSX 60 index. So certainly things are starting to look positive here. The weekly momentum has confirmed that move higher. You have positive money flow on both the daily and weekly charts. So this is, again, positive for the Canadian markets to continue moving higher. This is one of the bright spots that we're currently looking at. Another one that we're also looking at are the Canadian banks. Canadian banks have not been particularly strong, but as earnings passed last week in the US, banks are starting to look a little stronger here now. One of the things I want to point out here, if you look at the XFN, which is the financials ETF, 32 has been a pretty major level after the sell-off, providing as resistance first and recently providing more as support. So this leads us to believe that financials now can continue to rally up into that $36 level, which coincides with the 200-day moving average. So financials looking a little stronger here. Money flow starting to turn positive on the daily chart. Weekly starting to improve here, no longer becoming as negative. So things are starting to turn around here a little bit here for the banks. Definitely one sector to pay attention to. I do want to update everyone here on the US markets, looking at the S&P 500. We've been talking about this fairly narrow trading range that it's been trading in between 317 and 323, which is where it's been stuck for the past week. Looks like markets are opening up today again on a slightly stronger note on the back of what is considered more optimistic views of the vaccine for COVID-19. So we do believe that the US markets are potentially headed up to as high as a 339, 340 all-time high back here in February for the S&P 500. If you look at the NASDAQ 100 index, starting to bounce off their support levels as well and starting to move higher. So this is, again, supportive of US markets moving higher, which likely is going to drag the Canadian markets higher as well, especially if you look at the financials. Now, I did want to give everyone an update here on dollar CAD, as I know many Canadian investors trade both US and Canadian markets, and you're concerned about FX rates. So I did want to provide a bit of a view here on FX. So 136, 135 has been a pretty significant support or resistance level going back to 2017. So this is a level that we've been talking about, finally broke out during the COVID-19 sell-off and is now coming back to contend with that 135 level again. And the question is whether we are going to continue moving higher or lower. And we have some research to show you that might give you some indications to where it's headed. But if you look at the chart itself, after breaking out above this 135 level during COVID-19, you had this massive move followed by this consolidation period of which it failed to continue moving higher. It just started to move back lower. And since that move lower, what we've basically had is a bit of a triangle here that has formed in this chart. So my expectation is that you're likely going to see dollar CAD break back below that 135 level and continue moving lower back into this 130, 135 range that it's been trading in for quite some time here. So certainly dollar CAD is one thing to pay attention to for a lot of Canadian investors, but my hunch here is that it's going to likely resume to go back into that 130, 135 level. And I did want to point out some research that Credit Suisse recently did, which was looking at the Canadian dollar and the correlations to risk assets look like the SPX. And what they found is that the Canadian dollar was most heavily tied to gains in the SPX. So if you think about the fact that, you know, US dollar is getting weaker, which would certainly put pressure downwards pressure on dollar CAD, and you have the Canadian Canadian currency or Canadian dollar heavily correlated to risk assets like S&P, and we expect equity markets to continue to rally, that gives us a bit of a tailwind, if you will, for dollar CAD to continue moving lower here. So that's really our view here with respect to dollar CAD. Now, if we look at crude has been surprisingly strong given the backdrop of what we're currently in. And this is something that I talked about last week. This is something that we'll likely be talking about for the next few weeks, which is the fact that as crude continues to try to rally into that $41 level, now this is the WTI contract in the US, and this is quoted in US dollars, but as the crude contracts continue to trade into this narrower and narrower range, what you have is momentum no longer confirming those moves higher, which is why I had initially believed that this was going to fail and continue to move lower. But in the backdrop of all the weakness in terms of demand, in terms of the cuts to supply, in the additions of supply, we are not seeing oil continuing to fall. This is a potential opportunity for oil to continue moving higher here. So we haven't made that move yet. I think it's early to tell, but I do think that we are on the verge of a breakout here in oil potentially higher. Originally, my views were that it's going to break out lower, but based on the fundamentals right now and based on how oil is reacting to those fundamentals, I am now in a believer that I think that that crude could potentially move higher. Now, if we continue to talk about dollar weakening, right, and that's exactly what we're seeing. We're seeing the treasuries basically rally across the curve. We're seeing 10-year yields at all-time lows, reaching new all-time lows. And we have new concerns about inflation. We're continuing to see gold become the best performing asset during this time. And this is really the weekly chart here on the left. As you can see, very strong bullish trend here. Same thing on the daily chart. So if we would really have to go back to the you know what, let me pull up gold here because I think this is probably a better way. Sorry, I'm going to pull up gold futures. So one of the things I wanted to show you is that gold recently broke out above this $1,800 level, which was a multiple resistance level going back here in 2011, 2012, managed to break back above it. So the only resistance left here is around the 1900 mark. And that's really our next target here on gold, is for gold to rally back into that $1,900 range. So if you're trading any of the miners are a great way, or miners are a way to play gold with a more leverage applied to that trade. So for those of you that are playing miners, gold has been a pretty consistent mover. I would say more of a slow and consistent mover to the upside. This is one of the characteristics that we've seen of gold of late, which is really not like gold, which tends to be far more range bound and very volatile. We have not seen that type of volatility lately. We've really seen this more of a slow grind higher. So if you're playing those miners, keep in mind that miners tend to be more of a leverage play on gold. And when you're playing these miners, that you're going to likely see less volatility in those names than you normally might expect when you're looking at gold, because gold tends to be a little bit more volatile than we've seen over the past few months since COVID-19, as inflation concerns continue to fuel the flow of assets into gold. I did want to take a look at some economics. So June home sales came out here for Canada, came out a little worse than expected, but still a very strong showing here in terms of new home sales. So this was not just a 1 month fluke based on pent up demand, if you will, in terms of May. June followed it with another even stronger number here. So home sales across the board in Canada, very strong. This is also, I think, a bit of an indication as to how confident consumers are, which is a big factor in driving equity returns in equity markets, is really how consumers feel about the markets. Because if consumers are confident, they're going to continue to go out there and spend on big ticket items, whether it's homes, whether it's durables, whether it's consumer staples, consumer discretionary. These types of sectors are the strongest sectors right now. These are the sectors that will likely continue to be strong as long as consumers feel confident. And this is some of the numbers that we're currently seeing. GDP forecast coming out here for Canada. Looks like the forecast here for 2020 is somewhere in the -7 to 8% range in terms of GDP for 2020. 2021, the range is a little wider, somewhere in the 5 to 7% in terms of gains. So the expectation is that 2020 is going to be looking like a -7% GDP. That's the current forecast, but a pretty significant rebound here in 2021. And that's really the optimism, if you will, that the equity markets are looking forward to, rather than looking at the economic devastation that's currently being put in place in Q2 and likely what is going to be also a weak Q3 here for the markets. So wanted to take a look at some of the opportunities or trade ideas that we currently see in the market. First one I want to bring up is Brookfield Renewable Partners. This is a utilities company. As you can see, this company has been relatively strong throughout COVID. It certainly had the initial decline like many stocks, but quickly rebound as I think many participants realized that this was a little too fast, especially for utilities. And you have this major level around the 72 dollar level, which I would consider this somewhat of a triple top, but recently we broke out above that level. It hasn't quite broken out from its all-time high, which is around 76 or so, but this is one that we're watching right now because we could see a bit of a stall here and start to project higher above that 75, 76 dollar level here on BEP. This is certainly one that we have on our radar because the last push higher here that we got was confirmed by momentum on the daily chart, was confirmed by momentum on the weekly chart. Money flow not particularly strong or weak on the weekly chart, but looking pretty strong here on the daily chart. So this leads us to believe that this is not false break, that this actually has legs and can break out above that $76 level and perhaps recheck that support before continuing to move higher. But this is one that is currently sitting on our radar. Canadian National Railways, this is another one that we're looking at, which did manage to break out above its all-time high here around 125, 126 or so. And what you have is a recent breakout higher above this all-time high. If you look at the weekly chart, that's an all-time high. It was confirmed based on momentum. Weekly money flow chart looking strong, daily money flow starting to turn positive, momentum confirming this. Notice how the momentum is currently overbought. So this is one of the concerns that we have, is that you're likely going to get a bit of a pullback here, resolve some of that, or bleed off some of that momentum before it can continue moving higher. So from a positioning perspective or from a timing perspective, I don't necessarily believe that chasing these all-time highs is the right play, especially since you've had a pretty significant run from 120 all the way up to 130. I would like to see more of a pullback here before going into a long. Just from a risk to reward perspective, that would look more attractive rather than chasing this near that 130 high here for Canadian National Railway. And lastly, I wanted to take a look at Air Canada because we've been looking at some of the domestic and international statistics in terms of bookings, in terms of how much air travel there actually has been. So if we look at air travel, first of all, most of the air travel that currently is happening is almost 80% leisure. Very little corporate travel still going on. And if you look at some of the legacy airlines like Air Canada that relies heavily on business travel, this is really one of the airlines that we see as on the weaker side of things compared to a lower discount airline, if you will, that service more leisure airlines. And if you look at Air Canada has recently, tried to break out above that $20 level, but just could not manage to break back above that level, is now trading back into this range here. So we believe that Air Canada is likely going to see further weakness because we've seen demand for travel look like they were coming back to life a bit, but it's really started to decline again. It's actually on the decline as opposed to on the rise like we see in many other sectors. Air travel demand is just simply not materializing at the speed that we were hoping. Initially there was an initial bump here in terms of pickup, but as you can see, that fizzled pretty quickly and we're starting to grind lower here on Air Canada. So regardless of whether you're trading Air Canada or any of the major legacy airlines, for those of you that trade US airlines, American, United, Delta, these are ones that we're seeing the same type of trends. Initial pickup in terms of activity, but that trend has started to reverse over the past 4 to 6 weeks. And any travel that is happening is almost all entirely on the leisure side. So you focus on the airlines that are more discount, focus more on the leisure travelers. Those are the ones that if there's going to see any movement, you're more likely to see gains in those stocks rather than the legacy airlines like Air Canada. I think some of these legacy airlines are going to continue to struggle to get back on their feet as the amount of cash that they're currently burning is just simply unsustainable. And they're likely going to have to restructure. We're likely going to see a lot more bankruptcies in this particular space. So that is one area to be careful. Now, Air Canada, do I think Air Canada is going bankrupt? By no means do I think that's going to happen. But I do think that the stock is likely going to revisit closer down to that bottom of the range first before it recovers. Things are going to get worse before they get better. So those are some of the ideas that we're currently paying attention to here in the markets. I know there's a few notes here and I'm going to give everyone an opportunity to ask some questions, but that's a market overview that we're currently watching here for the Canadian markets. And for those of you that are brand new to OptionsPlay, if you're looking for more information on options trading or on the markets, you can sign up using optionsplay.com/TMX. This is a free service courtesy of the Montreal Exchange in partnership with OptionsPlay to provide everyone with not just education on options trading, but an access to the tools to allow you to analyze the strategies off of the ideas that we're presenting to you. So if you're looking at Brookfield Energy Partners, and you want to use this as a way to play this particular trade, you can utilize options to do so. We do this using OptionsPlay, and you can use this to plan for different strategies, and you can try different option strategies to take a limited risk view into some of these ideas that we're showing you. Access to the tools, access to the education, access to market outlook sessions like this is all available to you here at optionsplay.com/TMX. So with that, what I'll do is I'll open this up for Q&A. If anyone has any questions or any symbols you want to take a look at, happy to look at those together. I have a few minutes before I have to sign off and to help you guys navigate these markets. So someone mentioned big volume on USDCAD. I didn't look at the volume on that particular chart. But generally speaking, recent big volume, yeah, certainly seems to be a little bit more volume recently that's more so since COVID-19. I would say that volume has kind of declined a little bit since COVID-19, and that's understandable that initially you had a lot of volume in terms of this breakout above 135, but as we approach back to 135, things are getting a little muted again, and that's part of why I feel that 135 is likely going to fail, and you're going to see a resumption back into that 130, 135 range. Any good put selling income opportunities right now? So Debbie, we actually sent out a short put report. You guys should have received that here about an hour ago. We sent that out around 10:30, 11 a.m., which has a full report of every single cover call and short put opportunity we currently see in the market, specifically with Canadian markets. So Debbie, the best place to look for short selling opportunities, especially puts, is using that report that we sent out to you about a couple of hours ago. Robert saying, can you please look at ORL, lithium driving? Not familiar with this company. Let's take a look. ORL. Okay, so first of all, weekly chart looking very weak, right? We've seen a multi-year decline here from a weekly chart. Daily chart starting to look like what could be the bottoming formation here. So especially if you want to look at a chart here, you could say perhaps this is the formation of what could be an inverted head and shoulders. A little early to tell just yet, but you do have higher lows. On the daily chart, you've had the recent breakout from 2.6 or so. The breakout here being just barely confirmed by momentum, but as you can see, monthly money flow looking very weak. Subsequent rallies here on money flow also very weak here. So I'm more inclined to believe that this rally is less likely going to continue and more likely that it might just fizzle out based on all the things that I'm seeing. The fact that momentum isn't quite confirming these moves higher and money flow remains very weak. So I'd be very careful about chasing this particular breakout. That's my view, but that's purely just based on technicals. I don't know anything about the fundamentals of this company. If you have more to add on a fundamental overlay, that might be more useful for you. Could you recommend a Canadian broker for options on both US and Canadian equities? So, I've seen the full gamut here, right? It really depends on what's most important to you. Are you the type of person that requires a lot of support and you want education from your broker? TD offers a lot of education that's leading in that particular space. If you're looking for low cost, we tend to find that a lot of users tend to go for interactive brokers where you get less customer support, you don't get as much education, but you get a low cost trading platform that truly is a global trading platform and allows you to trade pretty much all types of global markets. And then you have, firms that are somewhat in the middle, lower costs, but still provide a decent amount of education like National Bank. So those are the firms that I would predominantly look at as a starting point: TD, National Bank, and interactive brokers, to give you a sense for the different services that different clients require. Ash is looking for UZH. This is the BMO equal weight healthcare hedge to Canadian index ETF. Okay, so this looks somewhat similar to some of the US healthcare ETFs in terms of recently, since the COVID-19 rally, let's just call it, after the initial sell-off. Price action was relatively sideways for quite some time. So when we say price action was sideways, that actually means that it was underperforming the equity markets. And then over the past few days have really started to rally again. That's exactly what we're seeing in the US markets. Now, if we look at this, weekly chart looking fairly strong. You have a recent breakout to new all-time highs, which has been confirmed on the momentum on the short run, but you have this fairly large negative divergence here on the long end from a charting perspective. Money flow looking a little bit stronger here on the weekly chart. You do have, again, confirmation of this breakout here on the daily chart from a momentum perspective. Money flow looking relatively strong. So all things considered, I think that this is a pretty strong case of a continuation higher. I would be concerned that you do have this unresolved negative divergence and you could have a pullback here to the $64 range, which is a fairly small pullback here before you get that resumption higher. So keep that in mind. That's the only concern that I have here, but everything else on this particular chart looks fairly constructive. Now, someone wants to look at DocuSign. I don't believe there is a Canadian version of DocuSign, so I'm only looking at Canadian symbols here. KGC, Kestrel Gold. I don't think this is the one that you're looking for. I think you were looking for KGC, which is the US symbol. Is there a TSX symbol for Kinross? There is, it's just K. Okay, so let's look at this, Kinross. So this, similar to many of the gold names here or the gold mining stocks, you have this recent breakout here on the daily chart, weekly chart looking very strong here. Same thing here. So a bit of divergence here on the moves higher, as you can see on the weekly chart, as you made a higher high, momentum did not make that new high. Money flow looking fairly okay here. Daily chart, you made a new high. Momentum did not quite confirm those new highs, as you can see. So you have a bit of divergence both on the daily and the weekly chart, but the momentum, but the money flow looking pretty strong. So I think you have a small chance of a pullback here into this 10.5 range, and then it starts to move higher here. But I do think that you do have a constructive breakout here on Kinross Gold. Overall view on tech, is it overbought? I don't think tech is overbought. If we look at the NASDAQ 100 index, as you can see, the NASDAQ 100 index, RSI, still trading at 67. Not quite overbought yet. I think that you can still have quite a bit of room to grow to the upside to get truly overbought, because as you can see here, back in November, December, as the NDX went from about 8,500 to 9,600, it remained overbought that entire time. So overbought does not necessarily mean that markets can't continue to move higher. It just means that there's a higher probability of a move lower. But if there's no catalyst, you know, especially when markets are looking at 2021 right now, and you see fairly strong optimistic outlooks, especially technology as a sector is not the type of sector that is likely going to be as affected by COVID-19 as maybe consumer discretionary, consumer staples going into the second half of 2020. Technology, if anything, is going to get a bit of a tailwind as the way that consumers are going to shift how they're going to work is likely going to change substantially over the next couple of years. Technology and communications are the two sectors that are really going to benefit from that. So overbought, certainly approaching overbought, but that in itself does not necessarily mean that you're going to get a pullback per se. CGX. Yep. Sorry, guys. We had a bit of a technical difficulty here, but I am back here. Debbie wanted to take a look at CGX. Let's take a look at CGX. This is clearly a theater movie theater stock. Movie theater stocks not looking very good. You know, there's nothing about this chart that looks constructive. I don't necessarily know that I would go out and short these stocks, because I do think that these are the types of stocks that all you need is some type of good news and you're going to get a, you know, a 10% pop higher, as we've seen in airlines and we've seen in many of the reopening type trades. So that is my concern about continuing to push shorts on a stock that is already down 90% from even, you know, it's, or, you know, 60-70% from just its pre-COVID-19 highs. So those are some of my concerns about shorting these types of stocks, in my opinion. What indicator that you are using and why are you using it? I just use an RSI. This is a simple RSI, and I put a 9-period moving average on that RSI to smooth it out a little, and I use a chicken money flow. Those are the only indicators that I use for my trading. What about PYR? I'm not sure what PYR is. Pyrogenesis Canada. No, I know nothing about this stock. This clearly is a venture stock, so I usually don't comment on venture stocks just because they are effectively penny stocks. Can you look at option strategies for Royal Bank of Canada? This is one that we covered last week, Royal Bank of Canada. This is one that we're fairly constructive on. So from my perspective, you know, I do think that it's, you know, it is time to start considering taking a look at buying some options. So I would look at something like, you know, on Royal Bank of Canada trading at $95, I can buy a September 94-102 call vertical, which expires in 60 days. So 2 months worth of time. That cost me $2.85. Just to put that into context, $2.85 for a $9,500 stock is risking less than 3% of the underlying stock price to take a bullish view that Royal Bank of Canada will continue to see some strength going into the next couple of months. So my preference at this point is to use strategies like this. Reduce your risk as much as possible. Here in this particular case, 3% of the underlying stock price to take a bullish view. If you're right on that bullish view, you're getting paid almost 2-to-1 risk to reward ratio on your trade. If this trade doesn't work out, you're risking only 3% of the underlying stock price. That's the way to go, in my opinion, for trading these types of stocks at the moment. Any indication contingent options will be implemented. I'm not sure what you mean by contingent options. If you could clarify, I'm happy to take a look. APRA, cannabis. So cannabis continues to be weak. I don't see a strong catalyst at the moment that you get a breakout here. As you can see here, I don't particularly think that you have a lot of strength. I think if you're going to play cannabis, you might look at some of the larger names, but you could say that you are starting to put you could say that you're starting to put in what I would consider a bit of an inverted head and shoulders here. But again, you haven't had the breakout. You need to get the breakout here. In my opinion, cannabis is a very neutral type of industry at the moment. I don't see a lot of catalyst for a turnaround here. US legalization is nowhere near on the table. Canadian markets are still continuing to see store openings. We've seen store openings in May. We saw store openings in June. That trend has been fairly neutral. We haven't seen really a significant pickup in that. We do need to see, in my opinion, more of a larger pickup in that before that can happen. Michael, thank you so much on the bike. I love cycling outside. This is not the best year for cycling outdoors right now, but certainly missing the Tour de France. Normally, this would be right in the middle of the tour right now. For those of you that are cyclists, Clear Channel Outdoor Holdings. I don't know much about the stock either, but you had this recent, what looked like was going to be a bit of a reversal of this downtrend, but recently we just broke down below it. So this looks like more of just what was a consolidation flag here after that continuation down here. So you had that move to the downside, traded in this flag, and is now perhaps starting to move lower again here. So not boding particularly well. Money flow on the weekly and daily chart looking very weak, not looking very strong here for this particular chart. My comment about technology being overbought is that technology certainly is approaching overbought, but that in itself does not mean that technology can't continue to move higher. And that's what we saw back from November all the way through February. We're nowhere near those types of overbought levels. So I think technology still has quite a bit of room to grow to the upside. HMMJ, marijuana ETF, similar type chart here before. You don't have this breakout here. You still have this 8.5 major resistance level. I'm sorry, 8 resistance level, which has played a significant level for quite some time. Now the 200-day moving average happens to be at the $8 level. So if you do get a break above 8, then I would say you have a significance for this. But if you look at the weekly chart, this does not look constructive at all for this industry. Money flow looking weak, both in the daily and weekly chart. This is not constructive in my opinion. FVI, Fortuna Silver. Silver, on the other hand, has seen some significant moves to the upside. Silver more tied to industrial demand. We've seen that pick up substantially. We've seen industrial activity around the world continue to pick up. This is one of the, I would say, surprising elements of this recent recovery is how quickly silver has managed, or how quickly industrial demand has recovered. So we are seeing this move here in silver on the weekly chart, as you can see, being confirmed here on the momentum. Money flow looking starting to turn positive. As you can see, throughout this entire rally, money flow has been very positive. Hasn't quite confirmed this breakout higher, but everything else, the weekly chart, the money flow, everything is constructive of this particular breakout. You do have a small chance of a pullback here into the $7 range before it starts to move higher, but overall silver looking strong, and technology looking very strong. So with that covers what I wanted to show you guys here today. Thank you so much for taking the time out here this morning or this afternoon, depending on where you are. we really do this so that you guys can have a better understanding as to how the bigger picture in terms of the macro market is currently looking, sharing with you our charts, the research that we're currently paying attention to inform our decisions, and then giving you guys an opportunity to ask some questions regarding some of your symbols that you wanted to take a look at. So again, I hope that you guys find this useful. We will be sending out the recordings to everyone afterwards, so you can follow along at your own pace along with the charts and the slides. So I'll send that to everyone once we're done, and I hope you guys have a great afternoon.